Breaking news! Bitcoin will trigger a financial meltdown that will be worse than the 2008 financial crash. This is Sir Jon Cunliffe. He is the Deputy Governor for Financial Stability for the Bank of England and has been since 2013. That makes him a very senior policymaker, and it is his job to monitor financial market infrastructures and payment systems, so you can see why Bitcoin and cryptocurrency in general would be on his radar. And on the 13th of October, The Guardian published this article in which he calls for tough regulations of cryptocurrencies and likens the danger that we might face to that of the 2008 financial crash. He says that digital currencies could trigger a financial meltdown if tough regulations don't come into force, and he in particular singles out Bitcoin, I imagine because it's the biggest and therefore the most attention-grabbing. Now, you've probably all heard it to death. If you'd stuck 500 quid into Bitcoin 4 years ago, you'd be sat on 40 grand, and to be honest, that figure is probably already out of date, so I'm not even going to bother trying to give you an updated one. I began putting this video together on Wednesday the 20th of October when Bitcoin passed all-time highs and one coin was worth around $66,000. To understand why he is suggesting that Bitcoin could cause a financial crash of this nature, you need to understand what happened in 2008. The stock market crash in 2008 was the worst ever single-day drop that markets had ever seen up to that point. And although markets would go on to recover, it certainly dealt shockwaves through nearly everybody's finances. To keep it brief, many people had taken on mortgages and debts that they simply couldn't afford, and lenders were so relaxed that they were giving money to, well, let's just say not the best candidates. Lenders were then repackaging these loans and selling them on the secondary investment market. And as house prices continue to fly up, this subprime mortgage market grew massively too. Because house prices were rising so quickly, the equity people had in their homes was too, and people began to feel rather invincible. Of course, until the house market slowed down and the bubble burst. Anyway, there was a great film that will explain that all much better than I can to you called The Big Short, and it was full of much better looking actors too. What Sir Jon, hope he doesn't mind me calling him that, is suggesting is that the rise in the value of the crypto markets is very similar to the rise in the value of those subprime mortgage markets, and that markets could be rocked by an event in the future of similar magnitude. Which got me thinking, what could that event be? Well, there are a number of threats to the crypto market, but for me personally, the biggest threat that there is regulation, which is interesting because that's exactly what he's calling for. It's a bit like the legalise weed argument. While it remains illegal, you drive shady behaviour. Legalise it and you could solve those problems. With Bitcoin, I'm sure they'd rather eradicate it and the whole world of magic internet beans entirely. But accepting that that's unlikely, unless you're in China of course, who have banned transactions entirely, they must instead accept it's here to stay and find a way of making it a safer space. Well, that's the theory anyway. So you take it all seriously, the article is keen to stress on Sir Jon's credentials, and for sure they are impressive. This is not like Julie from number 16 happened to mention it while she was sticking out the bins. So do give it some thought and think about what your exposure to crypto is and how you would feel if it went pop. The crypto market is worth about $2.3 trillion, and probably a lot more or a lot less depending on when you're watching this. But one interesting stat from the article is when taken in the context of global markets being worth $250 trillion, you can see why it's quite easy for some people to argue that it's only a small portion at less than 1%. However, like a house of cards precariously stacked, it only takes one to fall to cause a bigger collapse. The subprime mortgage market was only worth $1.2 trillion in 2008, and we know how that went. The fear here is that as crypto becomes more popular and FOMO ever increases, people will start to make more and more financial bets outside of their means, and putting at stake more than they can afford to lose. And what's even worse, could even start borrowing money to invest more. It's this borrowing that Sir Jon Cunliffe is particularly worried about, and for me, I can only see the speculation in crypto growing, so I can totally see why he is concerned. Whenever I see big moves in the crypto market, I like to treat myself to 10 minutes on the eToro social stream, as the stuff on there is either bizarre, hilarious, or utterly terrifying. More often than not, it's full of people asking, is it too late to get on the train when things are going really well? And people asking, is it too late to bail out when things are going not so well? If you're ever bored and you've got 10 minutes, I can highly recommend a peruse over there. Jon goes on to say, it's just Jon now, okay, that crypto has no intrinsic value. Now let's not get into that in today's video, that is a whole nother topic. But as people begin to borrow to invest more into crypto, it creates a stronger link between the crypto market and traditional markets. Don't forget, crypto is an unregulated space, and although that's the attraction for many investors, it does increase the risks. There is no one there to catch you if you fall. I think regulation is inevitable. To what degree, I don't know, and it would seem that they don't either. Going back to the article, he says that the risks, and I quote, are relatively limited. But the fear is that as crypto markets grow at this rapid pace, so do the risks. He talks about the nature and speed of regulation and how difficult it is to do it properly when the markets move at this rapid pace. All that language says to me that regulation is coming, but it took them 2 years to draft some general guidance, and in that time, trading platforms for digital currencies grew 16-fold. With organisations as big as the regulator, it's like turning an oil tanker, and I think that is their biggest concern at the moment. Crypto markets wait for no man, not even the Bank of England. Now remember, this is not financial advice, and investing in cryptocurrency is high risk and completely unregulated. If it is something that you'd like to explore, I will leave a link in the description below to Coinbase. If you use that link, you will get yourself some free cryptocurrency, and I will too, as a great way of supporting the channel. And while you're doing that, if you are worried at investing at all-time highs, check out this video here and it'll show you what to do.